Greetings everyone and welcome to GPA Trading Services Master Trader Program webinar. We are so pleased that you all could be with us. Thank you so much for joining us and spending this time with us. I am Tricia Ann Albrecht and I'm the co-founder of GPA Trading Services. And we here at GPA Trading Services pride ourselves on imparting a tremendous amount of knowledge, but we also like to have a lot of fun and keep things interesting and a bit different. We have our own little twist and unique way of covering the markets. So we're thrilled that you could take some time and be with us this evening. So I'm going to go ahead and now turn it over to Gary, and Gary's going to walk you through the presentation. And if you have any questions later on, I'll be happy to answer those for you. So now I'd like to say please sit back, relax, and enjoy if you will, and we'll begin this evening's event. Thank you so much.
Hello everyone. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I'm the creator of the software, educator, and the instructor. Brief bio, I've been a professional trader for 20 plus years. I'm a technical analysis expert. I'm the creator of a one-of-a-kind custom trading software. I founded GPA Trading Services about 7 years ago in 2010. I've educated thousands of students across the world over the past 10 plus years, conducted numerous live events, speaking engagements, and a platinum program. We also offer one-on-one coaching and mentorship programs. If you haven't had a chance to peruse our website, www.gpatrading.com, we welcome you to do so. Tonight's topic is the MPA pe3 Master Trader Toolbox. And we're going to go over a few of the tools. We have many tools that are included, but there's some key components that make up all tools that, regardless of your personal preference of what tool you prefer, this will be the basis for those tools and how you should use them. Brief disclaimer. This is a common disclaimer everyone's seen many times before. I'm not going to sit here and read through it, but I will take a few moments to highlight a couple of things. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds that they can afford to lose and that fits within their overall financial plans as developed by a financial planner. Never risk more than 2% of your entire account balance on any one given trade. Options traders should never risk more than 5% of your entire account balance on any one given options trade, and always adhere to strict proper money management. That is a critical component no matter what type of trader you are. And finally, all information in this presentation is for educational purposes and should be not taken as investment advice, nor as specific recommendation or endorsement to buy or sell any specific investment, and remember to trade at your own risk. Now, and I talk about this in all realms of key components in anticipating future market conditions. Whether you want to trade, you need to know more or less where the markets have been and, most importantly, where they're going in order to take a successful trade. The key components, as basic as all get out, is support and resistance. But a lot of people are misinformed on what true support and resistance are. They believe it might be support or resistance because the market's seem to turn a little bit and go in an opposite direction. So they think, oh, that must be support. It's going higher now. I should go long. Or it's been rallying. It's giving a little pullback. Well, that means that's resistance. I should go short. Well, you need to find the critical support and resistance levels before you take a long or short position. Trend direction is critical. If you're in a pullback of a strong upward trend, then the old saying is buy the dip in that uptrend. Don't necessarily sell the dip, but buy the dip once it's over and resumes the trend direction. And a critical component in understanding what the direction of the trend is going to be utilizing multiple time frames. Because Steve, as you can imagine, if you get in a position, if you're on a 5-minute time frame and it looks like the markets are going higher, but you look at a monthly time frame and they've been dramatically declining over the last few years, that is not an uptrend on that 5-minute time frame. That's just simple a cycle within the bigger picture of the downtrend or a correction. And what's critical is understanding how the lower time frames cycle within the larger time frames. We like to refer to that as our line of progression. Similar to the football fans, when a quarterback like Drew Brees today, I saw the Saints play and beat the Packers. And you go through, you have a receiver first in mind, and then he goes through his line of progression. Well, that receiver's covered. He goes to the next one, the next one, the next one, the next one. And he's one of the best in the NFL at going through his line of progression. He knows where everyone on the field should be, including not only his offensive receivers, but the defensive players as well. So, just a brief way of showing how we talk about aligning time frame with these screenshots. You'll notice this is oil, looking at a daily, a weekly, and a monthly. We have the daily time frame illustrated by the D1, a weekly by the W1, and an MN for the monthly. And you'll notice in this example, we're aligning oil in overbought territory on all three time frames. And I'll use an illustration for that. On the monthly, you can see the monthly was in overbought territory. The weekly was in deep overbought territory, and we're going to discuss what exactly is overbought territory versus oversold territory. And it's basically this red line up top. When these indicators get toward the top side, we consider those overbought, and that's why you have a red line, because you're thinking selling. And when they get below this green line, you're thinking about, well, it's oversold. I should be thinking about buying, but I need the proper time in which to do so. And again, as we go through, we can see all three time frames were in overbought territory, anticipating a large move to the downside. And that's all we mean by aligning the time frame. Specifically, as you look at the difference in that monthly, that is, weekly, that is an overbought territory, knowing we were going to expect a big, large move down, we then looked at how the daily would start to cycle within that. The daily starts in that same overbought territory at that same swing point high. And then as you can see on this stair-stepping affair, we like to say as the time frame cycle from overbought to oversold, oversold towards overbought, overbought toward oversold, this is what we anticipated would happen when a daily tries to cycle up and against a weekly that is cycling down. And we have this phenomenon called a slingshot, as the market continues to slingshot lower and lower and lower in the direction of the higher time frame. So this is how we set up our approach each and every day, regardless of what market we're trading. We want to get markets that are in overbought territory or oversold territory and watch how the lower time frames depressurize or start to move and cycle in a retracement, and then sell that retracement accordingly, as sell the rally in a downtrend, because we were following the direction of the monthly. And again, you can see the slingshot phenomenon over and over and over, and it just repeats itself. When the higher time frames are moving, the slingshot phenomenon will continue to repeat. This happens to be one of the tools in the toolbox, utilizing the cycling time frames and what we like to call the slingshots. Here's another example on a currency pair. Again, we have where the indicator is deeply oversold, starting to turn and hook, early stages on a monthly, and then we could see the weekly was already oversold, starting to move towards overbought. And we'll go through this process of a buy bounce initially first, and then of course the corresponding sell that came with it later. And then here the weekly started off in oversold territory, and there's a pattern we like to look for called the PAI hook and a trend momentum cross, or we refer to as the hook and cross pattern. Now this is a leading indicator in the sense that once you get the hook and cross pattern, we know exactly what price is going to do. It's definitely going to go higher, and we have some tools we add to this picture, like a Fibonacci retracement, to give you the highest probability trades. And again, the daily was also deeply oversold, ready to turn up, and the 4-hour started in as it was oversold, and once it started to reach this overbought territory, because the daily was still up, the weekly was up, and the monthly was just starting to turn up, we knew this 4-hour would do our slingshot phenomenon. And this is where here we have it slingshotting higher and higher and higher. And that is anticipated to be the case when you have the higher time frame moving in the upwards direction. And not only did we have a daily moving up, we had a weekly moving up, and we had the early stages of a monthly moving up. So this is why this was easy trade to buy the dips in the uptrend from that perspective. Here's one on gold, same scenario, just to do this real quick. We were in oversold territory, slingshotting lower, but we're expecting that once this move was over, we were going to see that move and reversal, because we were deeply oversold and it started this process, but we're in the early stage of bottoming and reversing. And notice what happened. We started the same thing with the daily as it moved from overbought to oversold and started to slingshot higher and higher as the time frame cycled, and you can see it again here on the 4 hour. Started overbought, went lower, then did the reversal. So it's all a matter of where your perspective is, where the higher time frames are lining, how you anticipate which way the market's going to move first, because you follow the cycle, and when the cycle is over, then you buy the uptick or the sell the rally or buy the dip, depending on the direction of the overall higher time frame. And again, it went on to push as we would expect. Now, instead of showing you screenshots of the software, let's just jump right on in to the actual software, and I'll start off with the market that everyone seems to love to trade. How about the S&P? Many traders out there in my past experience that trade E-minis, for example, they die and go to heaven when they make a point or two on the S&P. Well, with this system, as we align the time frames and the movement, we can anticipate where the market is headed. And this is just one of my charts I use during my live trading classes to talk about a little Elliott wave scenario and the unfolding, or this case, subdividing wave counts. Those of you that trade the S&P mini, our next stop is going to be 2614. You can write that down, 2614. And we're in the process of stair-stepping up that way. But as I like to tell everyone, price never, even in this strong upwards trend, price never moves in one direction. It always tends to stair-step. And during the cycling time frames, at lower time frame cycling, it allows for some sideways, up and down, sideways, perhaps a little lower movement during the correction. But notice what the S&P has been doing for years now. Lower highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and it just continues to go. Well, this is definitely going to go up to this 2614. Well, Garrett, does that mean opening session? It's going to go straight there? No, because we're about to come to this little wave 3 top, and we're going to need a little sideways movement. Just like we had the other day, we had a short retracement. And I told our students, I said, look, if we don't break this previous support zone, then look for this to reverse and go on to make new highs. At some point, you need the time frames to cycle and the depressurize, yes, but be more interested in buying the dip in the uptrend than you are selling the rally. But again, I don't know your type of trading. If you just want to make a point and get out, then there are times when the time frame's overbought and you can sell that, scalp it down and take a quick profit, sure. But if your overall goal is to be in this for a while and try to get to 2614, then it's going to go up, pull back, go up, pull back, go up, and that's how it stair steps. Now, particularly when you talk about stair stepping, all it means is these time frames are cycling. As I go to the software now, it means the time frames are cycling. And they tend to go from one extreme to the other than when they're interrupted. There's a period of time when it can stay overbought or stay oversold when the use of this slingshot phenomenon comes into play. Notice from a weekly perspective, this thing has been slingshotting since Trump was elected. This thing has been slingshotting higher for months, and we expect that it's going to continue to go higher, not based on who's elected, but based on the fundamentals. And this subdividing wave count says we should continue to buy weekly, daily, 4-hour slingshots over and over and over, because the market's going to continue to stair step up there. And it also means at whatever point in time we start to get these declines. As we were in live class the other day, I said look for the S&P to go down and touch the Ichimoku cloud, then bounce off of it and go on to make a new high back when it was up here. And someone would say, well, Gary, how would you be able to know this in advance? Well, remember the support and resistance levels. I'm not going to sit here and train everyone on Ichimoku cloud. It's a nice tool that many people use. It's a very successful tool. But when you combine it with the cycling time frames of the MPA price action indicator and the trend momentum indicator, we knew, as you can see on this chart, I've had this tactic, as I like to call it, to buy the weekly, daily, and 4-hour slingshots have been on this chart for months and months and months and months and months. And notice what we talked about, that hook and cross pattern. When we finally got the hook and the cross pattern on the 4-hour, with slope and angle and some separation, I said then, we're starting to get the crossover, and if we can get this to cross over here, and this continue the slope, it's going to go down and touch the cloud. Well, how did I know the 4-hour would do that? Well, that's where the hook and the cross pattern comes in. When I get a hook and cross pattern down on a 4-hour, it means my 1-hour is going to move from overbought toward oversold. How about that? So long before hour after hour after hour, chop, 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 sideways to lower movement, as the 1-hour grinded from overbought toward oversold, we could anticipate that, and I did that live in our class. And I continue to do that over and over, just watching the cycles of these time frames. So it's critical that we not only watch all time frames, but it makes a difference when the 4 hours in overbought territory and expected to slingshot higher. Why? Because my daily was in overbought territory, continuing to slingshot, and during that period, the 4-hour pullback, the daily was still engaging up. Even though it's deeply overbought, it still was up. And what direction was the weekly? The weekly was still up, grossly overbought, but still up. So I like to tell our students, as long as our weekly trend momentum and PAI are up or even flat to up, keep buying daily and 4-hour slingshots. And as long as the monthly is up, which again, it's grossly overbought, but it's still up. It's not turning and hooking. And the last time we had a true turn and hook with a trend momentum cross was way back during the flash crash. And boy, did we call that accurately. So what does that mean? Remember what we discussed. When you get a hook and cross pattern, what does that mean? If the hook and cross pattern occurs on a monthly, that means my weekly is going to go from overbought toward oversold. As it started to hook, we got the crossover. What did that show on the weekly? The weekly would move from overbought toward oversold. Overbought toward oversold during that flash crash. So what happens when the monthly decides to do it again? The weekly is going to go from overbought toward oversold. So Scott, imagine you can get a hook and a cross on a monthly, and the weekly could just be starting to move lower. And it takes week after week after week after week after week after week, knowing it's going to go in a downward direction because we got the hook and cross pattern on the higher time frame. So think about options traders. Do I trade a weekly option? Do I go a month out? Leaps? When do I use? What strike price? Well, based on where we are in the cycles, you get an idea of how long you should be in an option play. Because if my monthly turns and hooks and crosses, then the weekly will move. Highest of probabilities from overbought toward oversold in that example, and it should take weeks, not days, not hours, but weeks, and that's what happened. So what does that mean for the S&P? Is it just going to continue to go higher and never crash? Well, I don't want to be doom and gloom. I always see the markets as glass half full. But as you look at this Elliott wave, whether you respect Elliott wave, use it, or don't understand it, really doesn't matter. But this is forming to finish a super cycle, which we're going to get a dramatic drop and a market crash. Well, no one knows the exact time of that. I personally think the S&P is not only going to go to 2614, but over the next year or so, it's going to start to stair step up towards 3,000, maybe higher. Well, what needs to happen in order for that to do so? Well, if the Japan markets implode and then the European markets implode, all of those trillions of dollars are going to continue to go into the United States markets. Gold and silver is going to go to the moon, as well as the S&P and Dow, for some of these great stocks we have, are going to continue to go higher. And if Trump passes the bill that allows the businesses to have much lower interest rates, then they're going to bring in trillions of more dollars into the markets. So this is why the projected path for the S&P and the Dow is much higher short term. But no matter what happens, it's inevitable that eventually the markets are going to implode. And when our markets implode, we're going to see a dramatic drop in the value of the S&P and the Dow. Could be next month, could be next year, could be the year after, but it's going to happen. Well, I'm not worried about, well, I have to have exact timing in order to trade that. No. I'm going to get these hooks and cross patterns long before I need to worry about a long-term position. And the last time our monthly, this was kind of an eerie situation as we have over here, it stayed in this overbought territory for prolonged periods. And the markets just kept going. And when most people like Goldman Sachs told everybody, keep buying while they were loading the trucks full of shorts, then the markets crashed. Well, this is inevitable. When that super cycle is done up here, and I still think we got much higher to go, we're definitely going to get a wave 2 retracement. The next tool I want to mention on this same pair is when you get a hook and cross pattern, it gives you a high probability for a Fibonacci sweet spot retracement. Well, Fibonacci retracement is considered the sweet spot of 38.2, a 50, and a 61.8. Of all retracements, the vast majority would go in this area, then a 23.8 or a 61, a 86, a 88, etc. Anything higher, it can happen, but the majority would go to the sweet spot location of all retracement. So this is where the power of this hook and cross pattern comes in. Another market, and I'll just leave this here before we move on, to mention that with the S&P, again, I do think we're going much higher, but this is where this software earns its keep every day. When you get in these massive overbought territories, most people would say, well, oscillating indicators don't work in trending markets. When it's married to the slingshot phenomenon, there's nothing that works better. Look at this monthly. It went from oversold during the crash to overbought, and I kept buying the market over and 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 over. Why? Because the time frames were aligning, telling us so. Well, how do I know it's going to turn over and not continue to slingshot higher as it was doing over here and finally started to crash? Well, we're going to need a lot more than just a hook and a cross. We're going to need to see that pattern move all the way toward oversold. So as I mentioned to our students, how do I know when wave 2 is truly unfolding? When the monthly starts to move from overbought toward oversold. And you're going to have signs and symptoms of what those cycling time frames would deliver for us. Let's move to a different market. For those of you that want to trade other markets. Crude, for example. Crude has been on a somewhat of an increase lately, but it's corrective. It's clearly corrective, and we're still going to get a big down move on black gold, Texas tea, the Beverly Hillbillies. Why? Well, looking at this latest rally, my weekly started to move from oversold towards overbought. It's in overbought territory. Well, Gary, just because it's overbought does not mean it's not going to stop going. No, it could slingshot higher and higher as it did over here, but it's unlikely because we're starting to move back to some very strong resistance levels, including 55.22 up here, our swing point high, and then above that, this big block here represents about a $10 range of massive previous history resistance. So where's black gold going to go? I want to leave everyone today, whether you participate in our program or not, I'm going to give you some tradable ideas. On Ichimoku, the definition behind that is whenever price is below the cloud and starts to move toward the cloud, it should act as resistance and look for a lower high and a lower low. That's going to come into play. And what's going to happen on the software? Well, this is where this comes in, Richard. I've been doing this for 20 plus years. I created the software 10 plus years ago. I've been tweaking it every day of every year for decades, making it more and more effective. And this is what's going to end up happening. We call this painting the Picasso. I can paint exactly what the software is going to look like in advance based on the cycling time frame. And I'm going to look for this to run toward the cloud, reverse, and my monthly is going to turn over and head lower, and it's going to start to move from overbought all the way back to oversold, and we're going to start stair-stepping back down. Well, the question is, okay, Gary, my weekly's still up, so it possibly could grind a little higher. Sure, I'm still not convinced it's going to break the 55.22. And what is the 55.22? That's our former swing point high, the last time black gold rallied to start reversing, and now we're retracing back up. Is this going to be the breakout and go a little bit higher and then turn over, or is this going to end up making a lower high than a lower low? Only time will tell, but the bias is we're probably not going to break this all-important 55.22. Well, what happens if it does? I'm going to look for a little more upside, but minimal. But the whole time it's breaking 55, I'm waiting for the software to line up to give me a hook and a cross pattern to sell it, because its next destiny is much lower in the coming months and year. Lower. As my monthly would turn over, my weekly is going to turn over, and my daily is going to turn over. And that's in the near future. So yes, it's possible we could climb and grind and grunt a laboring rise to break 55.22. Unlikely to do it, but if it does, I'm even going to be more excited about a sell than I am about buying a breakout of 55. Because again, the software is already lining up. Daily's back in overbought territory. Weekly's back in overbought territory. And my monthly is moving in and back into towards overbought territory. So what's the tactic on S&P? We just mentioned buy the weekly, daily, 4-hour. Well, what's the tactic on black gold? It's going to be sell these PAI hooks and trend momentum crosses, because one of these is going to end up making these lower lows and lower highs and lower lows. And yes, even though we get a retracement, I told our students here, when this daily gave us the hook and a cross, we got a swing point low to a swing point high. Let me remove this one so everyone could focus on the aqua color. This is where the daily was last oversold. It went in overbought, and then it did our retracement down. The bias was we were going to get at least a move toward the sweet spot. If it wasn't just the sweet spot, it might continue to go and break in new lows. Remember, I'm looking for lower highs and lower lows long term. No one knows, as it made this high, is this the one that breaks on the new lows, or is it going to reverse? But we did know days in advance, when I got my hook and cross pattern right there, we were definitely going to see it go toward the sweet spot. And that's exactly where it went down to 50% retracement, then slingshotted back up. Oh, look at the daily. It not only turned and slingshotted up, but the trend momentum crossed back up. And my weekly, that was starting to turn over, disengaged and went back up based on the cycle, right? The cycle. So there's only so many more of these daily cycles like that before the weekly turns and we start to get the big stair step lower. But again, simple PAI hook and a trend momentum cross meant that if I can get a hook and a cross with slope and a little separation, no question, highest of high probabilities, we would go to a sweet spot location. So think about the power of that when you're trading stocks, futures, commodities, ETFs, bonds. I don't care what market you're trading. You know days in advance where your targets are. Why use Fibonacci? Because it gives me those specified targets. Later on, and during our class, we also talk about the relationship between how far a retracement goes and how far the next move higher would go to an extension, depending on where the higher time frames are located. So if this market were to break 55 and go on and go up, the highest I'm looking for it to go would be this $161, $57 range. Right? If it can break 55, it shouldn't go much higher than 57, because that's part of this relationship of A, B, C, D extension move. It went within the Fibo sweet spot, so when it makes a Fibo sweet spot retracement, the high probability it's going to grind towards the D extension of a 161. Well, if it goes deeper towards a 78.6, then the likelihood it's going to go to a 127. If you have a very deep one at 88, then it's likely to go to a 118. And you'll be shocked at how often these relationships play out. Well, that's great to know. Well, is it definitely going to go up here? That's why I'm not worried whether it's definitely going to go up here or not. I'm watching the cycles. So I can't expect to go ahead and buy black gold when my daily is starting to give me a hook and my weekly starts to hook. I know I should be on the short side of the market if I'm going to trade it, or wait until those cycles are over so I can go back and buy a up cycle. Yeah, I'm going to do a stock in just a moment. Let me throw in a currency pair. Here's a trade that we called in class, placed this live in class. We went up over 800 pips, took profits. I said, look for this to come back toward the sweet spot retracement. Why? We got the hook and the cross pattern. Now it's starting to stair step back up. And the next target for this one is not only the previous swing point up here, which is at 171.81, which is right at 300 more pips to get to the swing point high. But remember the relationship between a swing point low and a swing point high, sweet spot retracement. We should then move on toward a 161 retracement. For those of you keeping score up here, it's up here at 179. That's 1,100 more pips to come on the pound odd pair. What's the likelihood it goes up there? Extremely high probability. Does that mean that every day I can buy the pound odd and go long and look for it to go straight up? No, it's going to stair step its way up there, and it's going to utilize these cycles. My daily went from overbought toward oversold. Anybody listening what I said earlier? Tony? How do I know when the daily is going to go from overbought toward oversold? When you get a weekly PAI hook and a cross? What do we get? We got the engagement down, so we were looking for the hook, and we knew this would give us at least a retracement because what? My daily gave me a hook and a cross, and my weekly had turned over. So the likelihood it makes a sweet spot retracement is extremely high. And yes, look to buy the dips in this pair. My daily is starting to engage up. We got a trend momentum cross. So what does that mean? The likelihood we keep stair stepping back toward this next 300 pips is extremely high probability. And all I need to do, staying up 650 pips and counting, we were 800, we banked that. Now we still got 2 lot position running for the remainder. And I still say we got 1,100 pips minimum to come, if not more. Yes, it's going to take weeks and maybe even a few months to go up there. But the big picture is, why are we going higher? This right here is huge. And let me take out all these retracements. So from the higher perspective, why did I know we were going to make a higher low and a higher high? And why did we start to buy this when we saw that? Because my monthly was starting to turn over. Yes, it was oversold going up. And that's why when we got this pullback, I said buy the dip from a higher low and expect a higher high. Well, this phenomenon of engaging, now disengaging, means the probability we go on to this swing point high up here at 76.50 is extremely high probability. The most you can ask for in any type of system is to give you a low risk, high reward, high probability trade. Well, this system gives you the highest of probabilities when you follow the cycles. As the trend momentum and the PAI cycle from one extreme to the other, they exhibit very specific behavior. And if you were in our classes, not only do we make 1,000, 1,500 plus pips on the way up, but as this pulled back down, I was saying, as we traded it short, I was saying, I expect when this started to turn, it dropped hundreds of pips back down. I was saying the whole time, you see this right here? It's going to turn and hook out. Long before it did. You join our service, you can go back in time and find out the date of this. This was back in May 1st. And you could go back in our May, June, July, August trading sessions that's recorded. And you'll see where I said, as this is engaging, it's expected to disengage and it's going to reverse and go on and make a new high. Well, we're still got a ways to go, but we're well on our way. And this is a sign and symptom by engaging and disengaging that you see these two right here. They're going to continue over the next several months to move higher, 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 and higher. So I'm anticipating this is going to move toward overbought territory in the months to come. Yeah, it might engage, disengage, engage, disengage, kind of like it did over here, and continue to grind, right? It started and worked its way, so it's possible we could get another pullback. Sure, I know we're going to get those because the time frames always cycle. So this software can never be outdated or obsolete because it takes into consideration the time frames, how they cycle, and where they cycle. Well, this is like has an AI involved with it because this software not only is respecting where the other time frames are, it's programmed to look back to the lower time frames to know where they are and look forward to the higher time frames to understand where they're going to be and anticipate their future moves. So this little release right here is telling you, watch this over the next coming months. Scott, I guarantee we're going to go on and make a new high up here. Is it going to go straight up? No, it's going to stair step. But in the coming weeks to months, it's going to break this, which right now at 176.50 is another 600 plus pips, right? And it's going to go much higher. Why? Well, I'm going to follow it month after month after month after month after month after month as this moves toward overbought territory. Well, certainly it's not going to stay at that one level. You're going to get pullbacks, yeah? But even as this weekly started to turn over, as my daily went from overbought moving down toward oversold, and my weekly started to turn over, notice the trend momentums, they're still up. And I told our class, I said, look for this to turn and hook out just like the monthly did, and this weekly is going to continue to go into overbought territory. Watch the cursor. It's going to go in overbought territory. In the coming months, it's going to turn over and slingshot higher and higher. Well, what does that look like? And the last uptrend, you can see what it looks like. Where the weekly turns over, then slingshots higher and higher and higher as the monthly finish that cycle, right? So that's where we're headed, and I got to take profit up here still, hundreds and hundreds of pips away. A long way to go before we end up hitting all our take profits. But we still got a long way to go. It's going to chew through this cloud and go up hundreds and hundreds of pips and then some. Notice the monthly. The monthly again gave us this sign months ago, a couple of months back, and that's why we took this long trade as my weekly cycled back up. I told everyone get in it and keep buying the dips in the uptrend. Buy as long as my weekly stays up, you want to buy daily and 4-hour slingshots over and over and over and over. And once the weekly gets in overbought territory, as long as my monthly trend momentum and PAI stay up, which anticipate as we anticipate, I like to do with my class, hint, hint, hint. I expect to see this stay up in the months to come. So we will get this weekly to do the slingshotting in the coming weeks. But for now, my weekly is still up, my daily's turning back up, and I'm going to look for this to move higher in the coming days. Okay, well, how do I jump in this position where I don't want to buy at the top? I want to get a little dip to buy the dip in the uptrend. That's where this comes in with the 4-hour slingshot. So yes, I expect this to go chop, chop, chop sideways to maybe a little higher. We're starting to run into a little resistance, but I'm more interested when the 4-hour turns over and slingshots back up. Watch the cursor. Turns over, slingshots back up in the coming days, because that's what my daily's telling me. I got a trend momentum, PAI, both up, and it means the 4-hour should go from oversold to overbought, and once it gets there, it should turn over and slingshot higher and higher and higher. So I would say that if you do join us, I will lead you to buy those 4-hour slingshots in the coming days as we make those hundreds of pips and it goes back towards that swing point high and much higher. Gold. Gold is an important scenario. I told our students I expect gold to pull back further. It's part of a correction that's still unfolding. But notice this hook and cross pattern, how powerful it was. We had a swing point high on gold, and I told them look for gold to go from overbought toward oversold on the daily and run a Fibonacci sweet spot retracement as we did so. We got the big picture, and then on the upper end, when we started to turn from the daily hook and cross down, how did I know the daily would go from overbought toward oversold? overbought toward oversold. Because why? My weekly gave us a hook and a cross. Amen? Pretty simple. We got a weekly hook and a cross, and what does that tell me? It tells me, and we're talking a weekly right here, W1 is the weekly. So when I get a weekly hook and a cross, that means from a bigger perspective, we're going to go from a swing point low to swing point high, get a retracement to the sweet spot area, right? So far so good. We reached the 38.2. We could even go deeper. My weekly hadn't reversed yet, so it's possible we could go deeper. But notice here intraday, and I told our students, I said, once we get this daily to PAI hook, go ahead and buy it. And gold would at least go to 1304 or higher. In this case, it was 1297 or higher. I said in class 1300. I said, worst case scenario, we make a lower high and we break down to a lower low, but you're definitely going to get a move. And look at this. Anybody trade gold out there? From a swing point low of 1266, as this turned and hooked, I went out and guaranteed to my students, I said, we're going to go to 1300 minimum, even if it turns out it's a lower high and a lower low. Why? Because we got the PAI hook and a trend momentum cross. And what happens when you get a hook and a cross? Highest of probabilities, you're going to go to the sweet spot. You'll hear that, Nathan, over and over and over. We trade it top to bottom. So Gary, what if I'm not a long-term trader? I'm a scalper. This same hook and cross pattern works on a 4-hour, works on a 1-hour, works 15-minute, whatever time frame you want to trade. 5-minute? When a 5-minute PAI hooks and crosses, you know you're going to go from the sweet spot location off of the lower time frame, the 1 minute. And the 1 minute, when it hooks right here on a 5-minute, the 1 minute's going to go from oversold all the way to overbought. So you're not going to have a move from 1266 to 1300, double digits like that, but you'd have an intraday trade of, who knows, a few dollars. So it's all based on the hook and cross pattern and utilizing it with Ichimoku, utilizing it with Fibonacci retracements. And this is just the beginning. Remember what I just said a moment ago when I said this is a smart software that knows where its corresponding time frames are. They're aware of each other and their signs and symptoms as it unfolds. So when you get this hook and cross pattern, it's automated in our trade management system. When you get a slingshot formation, it's automated in this trade management system. And it's so smart, it knows when I should be selling rallies in a downtrend or buying dips in an uptrend. And I can input that correspondingly to do so. Or you can trade every which direction you want. You can try to trade we get little triggers, and trade every trigger short or every trigger long. But the key is to know what the higher time frames are doing, because based on that, we anticipate what the lower time frames are going to be forced to do. And my weekly is down, right? Trend momentum PAI are still down. So while that's the case, the daily did depressurize to where we said it was, but I said it's likely to reverse. And we'll see. If this daily can go on and make a new low, right? Let's just take, for example, this breaks down, we go down a few more dollars, and we make a new low. Then what happens when the daily gives me another PAI hook and a trend momentum cross? I'm buying the daylights out of that too. Why? Because I anticipate this weekly is going to reverse and go back up. All we need is one of those shoes to fall, and gold prices are going doubling, tripling, quadrupling. When the markets start imploding in Europe and Asia, where do you think those trillions of dollars are going to go? Gold, silver, and it's going to go into U.S. markets. Well, what happens if the European markets, the Japanese markets, and the U.S. markets all plummet and crash? Then gold's really going to take off, because everybody's going to be looking for a safe haven to invest in. So this is clearly buy the dips in an uptrend on gold. It's not sell rallies unless you're a short-term trader. Anytime you get a dip on gold, you should be advancing your portfolio with some sort of position. So in finishing on gold, yes, my weekly is still down. And I'm not going to hesitate to buy gold again when they get another daily hook. Right? I told our students, don't hesitate when it hooks. Buy it, it would go at least to this level. Especially if we end up getting another hook from a higher low. So keep an eye on this swing point low. That swing point low of 1260. I'm not convinced we're going to break 1260, but I'm going to follow the signs and symptoms of these cycling time frames till they turn. When it turns, then I can buy a PAI hook and expect I'm going to get a nice little retracement regardless. So how would that work? Well, the same rule. When a 4-hour cycles and you get a swing point high to swing point low, we got a what? Hook and a cross pattern. Everybody see it? It went from overbought to oversold, overbought to oversold, and then we got a hook and a cross pattern. So what happened here? We went from a swing point high to a swing point low, and what's the likelihood, Nathan, Mohammed? When I get a hook and a cross with slope and some angle and separation between these, the likelihood we at least go to a sweet spot is extremely high. Even on the 4-hour back down. It went exactly what it did on the daily I showed you a moment ago, right? From swing point high to swing point low, went to the sweet spot on that daily. Look at the 4-hour. Retraced back to oversold, gave you a PAI hook and a trend momentum cross. 4, 8, 12, 16, 20, 24. A day in advance, you knew it was going to go higher and you had these targets right off the bat. Okay, now we made a lower high and a lower low. Well, is that a surprise that we're making a lower high and a lower low on the 4-hour when my daily started to turn back down? No, that's what's expected, right? My daily was up because the 4-hour moved from overbought to oversold. It turned, and look, this is down, and my trend momentum crossed down. So I still have a trend momentum and PAI down at the moment. So yes, I would look for gold, a stair step perhaps a little bit lower, but I'm not convinced it's going to break 1260. Well, what can I do from a daily perspective? Again, once I get the 4-hour to finish the cycle and it turns back up, I can intraday scalp that back up, or I can wait for a longer term position for when the daily turns and hooks back up like it did over here. But notice it happens in all time frames. Same scenario. Hook and cross pattern is a leading indicator. When you marry these two together, it's leading because as the hook and cross pattern starts to unfold, you automatically know what your high probability targets are. And we teach you how to add the price levels to your Fibonacci levels, so when you know you're supposed to go to 50%, what exactly that price should be. All right? Everyone likes the Dow. Well, Dow and S&P are going to move in the same direction. But I just wanted to briefly show this. Where's the Dow headed? The Dow's headed, and it's going to continue to go much higher in the coming months, weeks, years. Just 1 second. It's going to go much higher, just like the S&P, especially when the markets crash and it continues to climb and go towards 3,000, etc. Absolutely. It should reach 3,000 market before too long, 30,000, sorry, and should reach that market before too long. Whether you're looking at the NASDAQ, any of them, they're all going to go higher because of the funds that are about to continue to influx in towards our markets. Especially when you start hearing the news media that the European markets are crumbling, Japanese markets, Asia markets, they're all going to start crumbling. And when they do, all of that trillions upon trillions of dollars that have been trickling in are going to be flooding in. And so we should expect these to go much higher. Let's go over here, and many people in our service like to trade bonds. Bond prices are something that everybody likes to trade. Well, this is the big picture on bonds. No ifs, no buts, no ands. Bond prices are part of an A, B, C, D longer term move, and it's going to go down to 125. Well, anybody trade futures or bonds? You can make a $1,000 move on simply a few ticks retracement, about $100 stop loss, and make a $1,000 10-to-1 ratio. Well, imagine how many thousands of dollars you can make on a 25-point move plus. We're in the process of stair stepping, and we call this retracement. We're watching the cycle. Well, Gary, we're starting to get a little bit of a bounce, and I kept telling everyone as we would sell the rallies in a downtrend that expect to see this start breaking down and continuing to stair step lower. Why is that the directed path? Well, the relationship between bond prices is we raise interest rates, which we will in the coming years. As they raise rates, bond prices on this chart are going to go lower. So over the projected coming years, we're expecting the dollar index, et cetera, and the Fed to raise rates. several times in the coming years. So that's going to help push these bond prices down. And remember the relationship I mentioned a moment ago? Let me take this out just to give us a visual. That why do we project it's going to go down here toward this 125? That's just one of the previous support zones, right? We'll look at the relationship between the swing point high, the swing point low, a Fibonacci sweet spot retracement, and where's my sweet spot retracement extension relationship? Toward a 161.8, right there about 126, 125, previous swing point low. It fits like a glove. Well, admittedly, Ichimoku says when price is above a cloud, it's going to take a tough time to chew through this. Yeah, but in the coming months and years, I expect to see it move down there. Well, if the markets implode and the Fed starts raising rates, not our market, but other markets implode, and our Fed starts raising rates faster, then this thing is going to implode and start moving down faster. If they delay raising rates, then this thing could linger longer, but long-term picture is definitely fulfillment of this de-extension. And how do I trade bonds? I follow the cycle. We're anticipating this monthly is going to turn over and move toward oversold, and this is going to continue to turn and continue to ride out in oversold territory as we move down over the next several months to year plus toward this previous low. First things first. Well, even though my monthly says we're going lower, we should have signs of our weekly continuing to do the same. My weekly's going from overbought toward oversold. Thought about engaging back up. It said we should turn over and continue to go lower, and each week it's been going lower. Little retracement. Expect this is going to stair step its way back toward the previous low of 45. So we got 7 points shorter term target and over 25 points longer term target as we stair step down. The beauty of Fibonacci's is we can use these 45, then the 42 range here, then my 137, then my 126. I can use those as it stair steps down. But watch in the coming weeks and months, especially as we go into 2018 and beyond, as we start raising rates, this baby's going to continue to stair step down. When rates are low, bond prices are up. When rates are high or higher, bond prices are going down. So there's no question this is part of a retracement toward this 125. Obviously, we got to get to 145 first. GDX. Many of us out there like to trade ETFs. I trade GDX all the time. And the bias is we're going to end up with a higher low and a higher high in the coming months, but we need to finish the cycle. We need the cycle to finish. And once it's finished, as I mentioned here, we buy the dips in the uptrend. So I'm looking for a higher low, higher high scenario in the coming months, if not sooner, as far as this reversal. Remember with gold, all we need is some world event, like a market imploding, to force gold prices to go soaring overnight. So it won't be long. As GDX and gold prices pull back, look to add to your portfolio for the long-term picture. Because this is not only going to go and break this previous high at 25 up here, it's going to go on and break the previous 31.79. Just like I think gold in the same breath is going to end up with a higher low and a higher high. Once we finish the cycle and turn back up, we're going to look for this to go on and eventually break what? Well, we need to break this swing point of 13.05, and then we'll stair step towards this 13.57. And the bigger picture, we're going to move on and break 1375 over here off the monthly. And yes, long-term projected picture is in this platform. I have my wave counts. I think we're in the process of moving much higher in the coming months. I still think before the year's end, and we only have a little over 2 months, I still think we're going to be at or near, if not higher, this 1375 price. So I'm definitely looking for a higher low and a higher high to come. Even if this goes down a little bit more, it's going to reverse and still work its way back up. Still shooting for that 1375. So just like I mentioned, when the daily PAI hooked, it would at least go to 1300. I'm waiting to buy gold again when it hooks back up. and I'm going to look for a break of this previous high here and stair step its way toward the previous high 57 and work its way towards 75 by year's end. All right? So what other tools do we use? We tie all of our tools into, look at Microsoft, just to throw out one of the pairs and currencies. Microsoft stocks, we trade everything. Stocks, futures, commodity, ETFs, bonds, we trade it all. Weekly is up. My daily is overbought. Slingshotting higher as expected with the weekly up. My 4-hour is moving from oversold all the way to overbought and slingshotting higher as well. So intraday stock traders, anybody trade stocks intraday or day traders? Here's another tool I'm going to throw at you in just a second. Well, the same signs and symptoms we talk about with gold, S&P, Dow, currencies, bonds. It's the same cycles with regardless of the market. The time frames cycle from one extreme to the other, and when they're following the higher time frame, they exhibit the same behavior. If they were to try to slingshot against the move, it's expected to fail, and then when it does fail, that's a buying opportunity. When it turns over, it's expected to slingshot higher. Why? Because my 4-hour is moving up in the direction of my daily. And my daily was expected to slingshot higher because it was moving up in the direction of my weekly. All right? So how do I trade this? Well, there's a tool we have, part of our toolbox. And I happen to have it on this currency chart, but you can use it on any chart. That's within our member market watch. And this is what we call a breakout. You can set a buy and sell based on a particular swing point high and swing point low. With the currency markets, we like to do what we call the London breakout during London, because historically price will break up and move in one direction or the other starting between that London session. And it either gets a break high or break low, and we can trade it based on the move that is projected. Well, this system is so smart, not only can I anticipate, it'll automatically calculate, in this case, what my high and low price is based on what hour I tell it. So I can tell it to, at the end of an X number of hour, I want to know what my high and low price is. So stock traders, for the first 30 minutes or first hour of stock trading, once you get a high and low range, we'll call it a range breakout, and we end up seeing some spike in volume and we break the previous high, that's a good time to go long. Or we see a spike in volume and we're breaking the low from the previous first hour or first 30 minutes, depending on your preference, then that's a good place to go to sell. Well, with this, we tie it in with the hook and cross pattern. So as I'm watching this, wherever I set my swing point high and low pattern, if my time frames are saying we should be going lower, I can tell this system not, if it spikes above it, the swing point high, don't buy it. Only sell it if it breaks the low. Why would we have wanted this? Because on the 1 hour, in this case I'm showing, we knew that my 4-hour was headed down and my daily was turning down. So we were not interested in buying a move toward the upside. We were more interested in selling a move toward the downside. And that's exactly what we saw here. And you can absolutely program it to do that. So with stocks, the same thing. I can change the time frame from 2 o'clock in the morning to 9, 9:30, whatever, 10, depending where you are in the world. Whatever time frame you want to know, it will calculate your swing point high and swing point low. And you can set pending orders to say, okay, if it breaks that, then I want to go long, or it breaks the low, I want to go short. And even more intuitively, if you're watching the cycles which we teach, then I would say don't buy it if it breaks the high, only sell it if it breaks the low when your time frames are cycling down. If that makes sense for everyone. Otherwise, if I was in this position and I knew that we were expecting the daily trend momentum and the PAI were up, the weekly trend momentum and the PAI were up, but my daily was, my 4-hour was starting to retrace down, and I get a swing point high and a swing point low, and my 4-hour is still down and it could go a little bit lower before it reverses, I would tell it, well, because my daily's up and my weekly's up, I don't want to sell the low, I only want to buy the high once it breaks the high. and you could set it accordingly to do so. So that's a breakout tool that we offer. But notice every tool, whether you're using Fibonacci's, Elliott wave, using people that like candlestick patterns, whether you're using candlestick pattern, you tie in the trend momentum and the PAI, and it makes any system better. Higher probabilities based on the simple cycles. And not only that, as I mentioned, you can tell based on the time frames where you're projected these movements should go. And what if I want to be on a much smaller time frame? Well, we offer scalping in the lowest of time frames. Whether you're doing a 15-minute, a 5-minute, doesn't matter. The cycles are still the same. The PAI hook and the cross is still the same. And the outcome is the same. Period. End of story. It's the same no matter what market, what time frame that you're trading. So yes, there are numerous other currency pairs, stocks, commodities, futures. I want to end with this, the dollar index. Why? Because this dollar index is projected to go up in a B wave, then down in a C, and then reverse and go all the way up here. Well, how does that help me trade stocks? How does that help me trade currency? How does that help me trade anything? Well, you can trade the S&P, you can trade any of these directly, but it's nice to know where the dollar index is headed, especially if you're trading currencies. And it has an effect on when the dollar strengthens dramatically, gold prices tend to go a little bit lower. Not always, but generally speaking. When the dollar is strong, gold goes down. When the dollar is weak, gold goes up. But it's not a guarantee, because I'm saying both the dollar index in the coming years are going to go much higher, and gold prices in the coming years are going to go much higher. And I'm bucking the trend where I'm saying it's going to reverse and both are going to go much higher. Well, for now, I think we're in a B wave up, and then we're going to go down in a C, and then we're going to reverse and go higher. Long term, the dollar index is going to sit up here at 120, 125. Whether it takes a year or two to get there, we're definitely going there. So what does that mean? That means I'm just following the cycles if I just want to trade the dollar index. Why are we strengthening? My 4 hours reversing going higher. Well, why does that happen? My daily reversed and started to go up. Okay, well, what's the projected path? The weekly is still up. So the daily is expected to start slingshotting higher and higher and higher. And the dollar index, remember our hook and cross pattern? We got a low, a high, we got a low, and here's my sweet spot location. I think we have the highest probability we're going to stair step to the sweet spot, if not higher, depending on the type of correction. Then we're going to head back lower. Well, as long as my weekly's up, what do we do? We buy daily and 4-hour slingshots, right? That tactic never changes no matter what market we're trading. And my weekly did start to change angle a little bit, but the trend momentum PAI is still up. It's not down. So it should force the daily to do what? Engage and turn and go back up. And the coming weeks, slingshot higher, higher, and higher as we grind up toward the sweet spot location minimum. Well, those of you that do trade currencies, the euro is going to go much lower. I still think the euro is going to make a higher low, higher high, then plummet towards parity and below. This is thousands of pips. So if you don't trade Forex, I highly recommend you trade some of it. Get on board. That's the most liquid market on earth. Well, my monthly is still up, but eventually it's going to turn over and go lower. My weekly is depressurized, and we got a hook and a cross pattern, and the euro is going to continue to stair step down toward the sweet spot. Stair step, I said, not just one direction, but stair step down. I've been short the euro. I'm going to stay short the euro until my weekly finishes the cycle, and then I'm going to look to buy and scalp and go long. But long term, I'm looking for this. Same thing I just pointed out with the dollar index. We're looking for the exact opposite of the euro. Once the euro finishes this move, which we're going to go lower first, then I think we're going to go higher, then we're going to plummet towards parity and below. Thousands of pips. If you trade standard lots, 1 pip is $10. Thousands of them are tens of thousands or hundreds of thousands of dollars, depending on how many lots you trade, etc. So what if I start off in a micro mini account and it's worth $1 per pip? Well, thousands of pips, still thousands of dollars. And yes, we've been scalping and trading in both directions, but we do what we call following the line of progression and following the time frames as they cycle. We look for specific signs and symptoms. And we do have one of my students in class with us tonight, and I pointed this out. When this engaged, and I said, don't be surprised as we rally in the 4-hour cycles up that this will disengage, but it's expected to re-engage and head back lower. I painted this picture right here to disengage, then re-engage while we were still going lower before it made the bounce and before it re-engaged. How do you do that? You follow the larger picture. And my weekly trend momentum and PAI are down. The daily should engage, disengage, engage, disengage. The bias is the daily is going to go from overbought to oversold, and once it does, it's going to slingshot lower and lower and lower and lower and lower. So watch the euro as it goes lower into oversold territory. So those of you that say, well, Gary, I want to trade stocks only. That's all I trade. Well, I could sit here and trade currencies all day, and I could teach you how to trade stocks better than any other service out there. Because these exact same rotations, hooks, cross patterns, Fibonacci retracements work every bit as well on all stocks, all commodities, all futures, all ETFs, all markets, period, end of story. And it's the exact same signs and symptoms across the board, and it works on all time frames. So I apply the same methodology for all markets. So once you learn the system, that's the last system you'll ever need. And along those lines, our students have been with us for years. 1, 2, 3, 4, 5, 6, 7. We have students that have been with us forever. Because since day one, because we have a service that is unique and a software that is unmatched in any markets and anywhere. So let's go back to the here's some trading results. We showed you live in the markets. Well, here's gold. We got the setup for gold, and this was a setup looking to buy and go long. We made, looking at this, check that out, $126 move. Anybody trade gold? We're not talking $1.50. We're talking hundreds of dollars. And all this was based on is the higher times were cycling up, and we were buying the dips in the uptrend. And this is just a piece of that move. This isn't the total move that ended up making. Here's a gold prices down, so it doesn't matter if it's up or down. $150 move lower. $30,000 trade on this little move down based on the cycles and the signs and symptoms. We didn't even get into the triggers. The triggers are another visual aid. When you get the trend momentum PAI hook and cross and you're in oversold territory, you get a trigger to go long, and when you're in overbought territory, you get a trigger to go short. Well, you can tell the trade management system to sell the trigger short or buy the trigger long. You can tell it to sell the slingshot in a downtrend and refuse to buy hooks or patterns up, only sell slingshots and triggers lower. Remember, it's like an AI. It knows what the time frames are doing. Here's one of our students. I love to refer to this because he started trading. He said, Gary, I'm going to try this in my TradeStation account, and I'm going to use the signals, and I'm going to place the corresponding trades in my TradeStation account. As you can see, he trades several currency trades, 8,600 pips and counting. He went on to say that we use another tool called the Slice of Heaven Finder. It's a scanner that scans the markets to find the markets that are in high time frame, monthly, weekly, dailies, and overbought or oversold. Or you can customize that to lower time frames if you're a scalper to tell you when those big trades are setting up. He decided to let it run because the time frame said let it run, and it went on to 18,300 pips. Here it is in his TradeStation account. Tally up all these trades, 18,300 pips. If he just traded one standard lots, that's $180,000. And Greg is with us tonight. He's a long-timer, long-term trader. And here's a big move up on gold again, $110 move. The pound odd, I showed you we're currently long in. Here's where we were short, 778 pips to the downside. Why? The time frames gave us a hook and a cross down, and we're stair-stepping lower, selling slingshots upon slingshots upon slingshot. And that didn't stop at 778. It kept going and kept growing to 1,274. And it didn't stop there because the time frames were still aligned. It went on to 2,070 pips, 2,270 pips, and that wasn't finished. So we decided to let it keep running, and we went up to 3,627 pips. All because the higher time frames were cycling and our signs and symptoms continued to manifest. Let the trade run. Here's an example of the pound cat, 3,073 pips. Pound yen, same scenario, 3,215 pips. All you need to get in is one of these trades, whether you don't trade Forex or not. Get in one of these on the higher time frames and let it stay and run while you trade your other markets. Here's those breakout trades I talked about. This one we went on and made 272 pips on one of these breakouts by setting the time frame and letting it sell the rally in a downtrend because we anticipated price would stair step lower and lower because of the higher time frame. That's a breakout trade of that software. So here's some successful options trading. People say, well, I'm an options trader. You don't use software. Well, I beg to differ. Because isn't it the underlying price that moves that allows stocks, option trades to gain or lose, etc.? Whether they go sideways, up and down, when the time frames are against each other, do a consolidation trade. When they're all oversold, do one, expect to go higher. When they're all overbought, do one, expect to go lower. Simple. Well, this person says that he made $1,200, then re-entered to make $300. He both used options on that move and is excited because he would have bailed on it at a loss if it were not for the software. And he goes on to say if Black Gold continues, his subscription will be paid just on that one trade. And he's an annual member. And that trade, by the way, did go on and pay for his annual subscription in one trade.
Many years over.
Many years over. Thanks for all the hard work in developing the system. As price proves intention, my ability to use the system is improving. He's going to drop his financial advisor, several newsletters he's paying for, and he applied for a Forex account. Here's one that was not a Forex trader, but he saw the power, not only how it helped him trade his options, but the power of trading Forex as well. Now, what is the Master Trader program? It consists of our software that has multiple tools, and our live trade classes where we teach everything in the greatest detail. You've never seen a live trade class like ours as far as educational purposes. We go in depth. Here's just a few, and we didn't cover these. I barely mentioned it. You get a market scanner that scans the market. It tells you when slingshots are forming, triggers are firing, time frames are aligning. It's got everything. The Slice of Heaven Finder is the one I mentioned that Greg used to do that 18,000 pip trades by letting the winning trades run, and it scans the markets to find those trades setting up that you don't have to look at a million charts. You just let this baby find them for you, then you add it to your chart. Trade triggers, I briefly showed those to you. Many tools. Trade management system is unlike any on the market. Very intuitive, can buy the dips in an uptrend, sell the rallies in a downtrend, can sell PAI hooks and trend momentum crosses, can buy them, and it does everything from A to Z, and it's customizable for all trading types. We have a scalping system called the Platinum Asia, if you like to trade during the Asia period. We have a triple P scalping system that can be used in all markets. We have that breakout trade system I briefly mentioned as well, powerful. And we always loved top 10 reasons why the software is the best in the market. It automatically calculates the support and resistance levels for you. It identifies the trend of each time frame simply by looking at the trend momentum and PAI up or are they down. That's how you tell the trend. It monitors and tracks the time frame cycles. That's the beauty. That is incredibly important because the software is intuitive. It provides consistent entries, exits, and take profit levels. Based on our triggers, we have profit triggers that you can set up to tell you when to take profit. You can use your Fibonacci levels we discussed. You can use slingshots. And of course, I just mentioned those profit triggers. The trade management system you can set up in advance and customize based on your entry criteria. Or you can just automatically manage it from start to finish by just letting the system run the trade. And that's the one I have running here that's been running for weeks now, and I don't have to do a thing. We don't have to do one thing but let this trade continue to run, which again, we expect it's going to go much higher in the coming days. This one right here. Look, if you'd have got in already, it's still going higher. We're going to get a dip and a retracement. The 4 hours is going to slingshot higher, and we're going 300 pips in the next several days to a week. And then it's going to go several hundred more pips beyond that. Guaranteed while you follow the cycles. And during the pullbacks, you know not to get in until the cycles return, or you can scalp it to the downside and catch the next move higher. It's that simple, just following the cycles. And if that doesn't do it for you, again, it fits any trading style, regardless of what market you trade. The dual scanners scan the markets for the next big trades, so you don't have to worry about missing one. It works on over 800 symbols, including stocks, Forex, futures, ETFs, commodities, etc. And of course, most importantly, it consistently delivers low risk, high reward, high probability trades. Okay, so what are we offering? We're offering a special webinar promotionals. All right, so here's the specials for attending tonight's webinar. We mentioned Master Trader annual program. The majority of our members have been with us for years, and we like to offer annuals because if you invest in us, we'll invest in you. And we don't leave anyone behind. Historically, if you go to our website, the pricing for this program is $4,997. Well, that's not what we're going to offer tonight. We've offered at previous specials at $35.64. Well, we're going to discount it even more to give you an opportunity to get in. And why do we want to do this? We want to pay it forward. We want to pay it forward for new students to join us at a lower rate to get in to see how accurate this market works. And why should you invest in something 12 months in advance? Because over the next couple of years, the market volatility is going to be greatest it's ever been. There's never been a time or a better time to be in the markets than right now, especially over the next couple of years. So what we're going to offer is a one payment, $24.97, to give you 12 months of this service. And here's the link. My wife will post the link. My partner will post the link. And it is www.gpatrading.com/amember/sign-up/annual $24.97. And Richard, if you join now, I'll give the first 50 subscribers 2 years access. That brings this system in our trading classes down to about $100 a month. You're not going to find that anywhere. And we spend on average 6 to 8 hours a week in live trading. And we anticipate and show you exactly what the software is going to do. So when it does it, you know where to get in, where to get out. We use the Fibonacci, we use all the tools. And I don't care if you're a successful trader or the most successful trader in the world, if you add these hook and cross patterns and the time frame cycles to any system, it's going to make it much preferred. So you'll get 2 years for $24.97. That is unheard of. Well, if you don't want to make the longer term investment of $24.97, we'll give you a discounted monthly rate. You get the same software, you get the same classes, it's just on a monthly basis. And that'll be $297 a month if you want to get your toes wet at $297. And after the and that is a tremendous discount right off the bat. And if you like it at $297 and you want to switch to this, I'll honor this later because you took the time to attend this webinar. And how do I sign up for the monthly? It's www.gpatrading.com/amember/sign-up/monthly $297. And my partner posted both links for you. So all you got to do is click on the link, fill out the information, and you can join us for class this coming Tuesday. We do our market forecast. We give you a site. And many traders would say, well, Gary, I have a job. I can't attend during your live trading class. They're archived, and we go through all time frames, so it tells you you should be buying the dips in that pound-based pairs. And the yen-based pairs we didn't even cover tonight, but they're yen-based pairs that you should be trading to the long side for months to come and years to come. Because when the Japanese market implodes, the yen's going to, Trish wants me to pull one up, so I'll do so. We're expecting these yen-based pairs to go an awfully long way in the coming months and years. And I'm going to give you the big picture on the pound yen. This is a very volatile pair, moves hundreds of pips by sneezing, and we're projecting it's going to move 10,000 plus pips in the years to come to the upside. Stair step its way higher and higher. Why? Pretty simple, right, guys? We got, and ladies and gentlemen, we have trend momentum and PAI up on a monthly. We got a weekly that's been doing what? Slingshotting higher and higher and higher and higher as anticipated. We talked about this months ago as it rallied 1,000 plus pips, and it's continuing to break new highs as we anticipated, and we're going to anticipate much further toward the upside in the coming weeks and months and years. So how do I get into this? Well, my weekly's still up, so the tactic for the pound yen is to, my daily is engaging up. This is where we start and buy the next daily slingshot, the next daily slingshot. But yes, there will be times when it pulls back. No more obvious as pullback than we got a what? A hook and a cross, right? Remember the hook and a cross pattern? So what did this daily do? This keeps repetition. Swing point high to swing point low. Where's it supposed to go when you get a hook and a cross pattern? To the sweet spot. Where did it go? To the sweet spot and bounce. And look, it bounces off the purple line of our Ichimoku. That's another reason why we added Ichimoku to the toolbox, because it's a powerful tool. It anticipates future support and resistance levels out into the future, and this is part of this retracement extension fulfillment. So if this is part of my retracement, where should it go in the coming weeks and months? My monthly's still up. My weekly should keep slingshotting higher in the coming months. So my 161 is up here at 161, 1,100 pips to come on the pound yen. And honestly, traders, does it matter if I make money on currency, stocks, futures, commodities, ETF? Does it really matter where you make the money? Money is money, and it still pays. And you spend it all the same, as you hear in the background. So it's simple to follow the cycles. They give you anticipated, obvious signs and symptoms. And the beauty of this is, what if I don't have all day to sit in front of the chart? That's the beauty of the system. You don't need to. You can set it in advance and let it do it for you. All right? So back to the promotional. Very simple. If you
the links, but they're not hyperlinking for some reason.
it should work on their end.
Okay.
And if not, if it's not hyperlinking, copy the link and put it in a browser, and then just click and go, and you should receive the page. No problems. But the reason we're pushing to $24.97, even though it's lower price long term, right? 2 years, much lower than this monthly rate here on average, is because over the next couple of years I want to give you the added bonus, because the timing is best now than it's ever been. To trade any market. It doesn't matter the market you choose, because the volatility is going to be higher than it's ever been. And it's the best time it will ever be in the coming couple of years, pushing out.
To learn how to trade.
And to learn how to trade.
If you don't want to know how, this is the best place to start.
And this is the best place to start, because we're very patient. I'll sit there and explain one trade for an entire hour, if necessary, pointing exactly what the software is going to do. Painstakingly go through every little nuance as the time frame cycle. But I promise you, once you get accustomed to it, you'll know what to expect. Like here, how did we know the daily, if it tried to engage, it was going to make a higher low, higher high, and then start pushing up? Because during this daily cycle, my weekly was up. Then why did we expect this daily to start slingshotting back higher? Because the weekly is turning back up. Engaging. And isn't that what we talked about from moment one, when the monthly's moving from oversold towards overbought? It was going to slingshot higher, higher, and higher. Sure is. And what is the monthly doing? Moving from oversold to overbought. So 1,000 plus pips ago, when the pound yen was down here at 123, we were talking about buying the dips in the uptrend and it going way up here and way up here. And look, we're halfway there to this level. And eventually we're going to be halfway to this level. And eventually when the yen market implodes, Asian market, but yen particularly, this pound yen's going to be up here, no questions asked. That's 10,000 plus pips from now. One lot is $100,000. One standard lot on that one trade. That's enough to pay for your service for a decade.
And a lot more.
And a lot more.
Have a lot of fun with that.
Because you're going to have multiple trades along the way and multiple opportunities to scale in. Since I won't keep us here all night, I just want to let you know these will be active, that you can type these in either now. We prefer, because I think these are going to go very fast as they normally do at this rate. They go awfully quick. We don't do this often. We don't mail often. We don't pound your email every day with something new. We stick with the same system because it works. And we add new tools and we teach how to use the new tools, but we make sure all our members are successful. That's why, and it speaks for itself, why they've been our members for 5, 6, 7 years and counting since our inception. Because it works. And we care enough to teach you the correct way to trade. And we just don't do cattle calls. I like smaller classes, and I'll never have thousands and thousands of people in my system. I don't want it. I want only a select few that want to be serious and we're willing to give you the opportunity for a very low investment. 2 years for $24.97 for what? The software, including all updates, improvements, enhancements, which we're always adding and improving over the years, and you're going to get it for 24 months. So this is the way to go.
Lionel, we don't charge more for new tools.
Lionel, no, there's no additional charges. You get everything. You can ask Mr. Tucson. Mr. Tucson's been here since we had just a couple of tools in the toolbox.
We never charge more.
And we never raise your subscription rates. We always keep you locked in at the lower rates. So take advantage of them. Any other questions?
He's got enough tools to keep him busy forever.
Yeah, the main tool, I promise you guys, you can show me any system, any tool, any strategy, and I'll add to it the hook and cross pattern and the cycling time frames, slingshots, etc. that go with it, as we like to call the line of progression, and it'll make any system superior. I don't care how successful. I can take a system that never works, add this system to it, and it will make it work like it's never worked, obviously, before. Or if it has worked, it'll work even at higher percentages. So,
do we have any questions?
Do we have any additional questions? We've gone about an hour and a half. Not that I'm worried about it. I just don't want to keep you guys too long. This is a system. We'll be having these webinars ongoing because, again, we've only touched the surface on a couple of the tools. And we didn't elaborate on all the tools we even touched, but I wanted to show you the power of the hook and cross pattern and how we use it tied in with Elliott wave, how we use it tied in with Fibonacci retracements, and including our slingshots. This is a phenomenon that no one has but us. It's part of the ebb and flow of the market. And people say, well, when price goes up, it's more buyers than sellers. When price goes lower, there's more sellers than buyers. Well, guess what this green line is called? Money flow. When money's flowing out to the short side or when money flows in to the buy side. That is a critical component of this system. So we take all that into consideration. Trend, you don't see a volume graph on here, but this is the same thing with the hook and cross and the slope and angle does. That is volume is built into that. There are thousands of lines of code in the background of this, unlike anything you've ever seen, like an AI. What I went with my program over the last couple of decades is I said, I want to build an AI that represents the way I trade, my mentality, so that the software acts and reacts like I normally would do. And I want it to be automated to an extent where even it's the easiest to use. This never changes, Lionel, never changes. No matter how many new tools, and we come out with really cool tools. In our next webinar, I'm going to illustrate some other, the scanners, etc. We'll show those. But we have numerous other tools we haven't touched, but every one of them ties into the same cycles and the signs and symptoms anticipated in advance based on how they cycle. I use this analogy all the time in my class. When you go to the doctor, they ask, well, what's your symptoms? What kind of signs and symptoms are you having? What brings you here today? Well, we use the same thing in the PAI and the trend momentum. If they're both up on this time frame, you know you're going higher. And my monthly could go higher, but we could have a big pullback because the other time frames are going lower. So the key is don't buy it when they're going lower, buy it when they're all going higher together. That's where the slingshot phenomenon comes in. And I say every day in class, don't buy without the foreman and the workforce. 4 hour, 1 hour, 30 and 15, and don't sell without it. This is the sell and buy cycles, this is the 4 hour, 1 hour, 30 and 15. But guess what a slingshot is? A slingshot is when these time frames are aligned. When my 4 hour starts engaging up, like we see on the pound yen here, that means my 15, 30, and 1 hour are going higher. That's why it engages. Well, what about a PAI hook from oversold, like here? That means my 15, 30, 1 hour, now 4 hour, because it's hooking up, is in a buy cycle. My daily, same thing. How do I know when the daily is going to engage? When the foreman, 4 hour, gatekeeper between the lower time frame and the higher time frame, is up. So I don't have to sit here, Lionel, and go to my 30 minute, my 15, my 1 hour, my 4 hour, and constantly look at the time frames. I simply go based on a PAI hook, because once I get a PAI hook, my 4 hour, 1 hour, 30, and 15 are already in alignment. When it engages, they're already in alignment. So that's why the PAI hooks and the trend momentum crosses are so powerful. And a PAI hook is the precursor to a potential slingshot. We'll teach all this in class and then some, and you'll understand it's so obvious why you should be in our service and why this will change your trading success overnight by simply following multiple time frames. Again, this system automatically aligns them for you by using the hook and cross pattern and by using slingshots, using triggers. There's many other ways to use the same thing, but they're all included. So as we close up tonight's webinar, I want to say thank you for attending the webinar. We look forward to you joining us. Remember the MPA, it stands for Market Price Anticipator Software. It will empower you to read and anticipate price in any financial market, on time, in time, all the time. And we're proud of this. We've been educating students from around the world, 116 countries and counting. And we're extremely proud of that. And if your country's not on this map, please join us and you'll watch country flag will appear on our Educating the World map. So that's really cool. So in closing, I'd like to again thank you for your time and attention. But again, one thing that will never change, what I promised my students from day one, this will be the last system you'll ever need. It can never be obsolete or become obsolete. There will never be a market condition where this system won't lead you in the right direction. It's impossible for that to happen because it's not a traditional indicator system. It's not leading, lagging, etc. It's a marriage of two with some significant coding in the background that monitors all time frames. That's where all these systems come into play. The hooks, the crosses, the slingshots, our trigger system, you name it. They're all tied into this phenomenal system. And that's what I mean by you'll never outgrow it because the markets will always have cycling time frames. Price is never going to go in one direction. It's always going to stair step the ebb and flow of the market, the buy and selling of the markets. That's where money flow comes in. If we have more buyers, do we have more sellers? That's where the cycling time frames come in, the hooks, the cross, the pattern, and what it means for the lower time frame. This is the website, but you need to use that link. In other words, if you go on the register page, you're not going to see these offers.
These are for tonight.
Right, this is a webinar offer under the register page. You can see in here, there's the annual, there's the 6 months, and the 3 month pricing. Like I said, that's our normal website pricing. You must use that link we gave you. So when you do this, So you do the link, annual $24.97. It brings you to this page. And you see we got it already set up for the first 50 people. One pay, $24.97, gives you 2-year access. You go ahead and either use authorize.net. It's secure credit card payments for all major credit cards accepted. Or if you already have a PayPal account, you might want to use that. We prefer the authorize.net. It's just a lot easier to deal with. And if you ever want to switch memberships, I can do it from with my side, then cancel and resubscribe under a different one. So there are benefits of using this first one.
Tell Nathan I posted the links.
Nathan, we posted the link for you. Look in the chat dialog. The annual is right here. You can see what that link is. It is www.gpatrading.com /a member, AMEMBER, /sign up, SIGNUP, /annual, ANNUAL 2497. And you should be taken to this page. Okay? And then if you do the monthly, then it's going to be the same thing minus the last being monthly 297. And when I click that, you're going to go to the exact same look and feel of the page, but this one is $297 per month. All right? And you go ahead and fill out your name, address, choose a username, go through the capture process. You'll go to the next page where you put in your secure credit card payments, and then you're good to go. And by doing so, you'll have access to the class recordings, the software, the platform. You have everything at your fingertips within seconds. And then you'll
24/7.
Right, it's available 24/7. And here's to give you an example what you do. Once you're in the system, you get a username and password. You log in, and you're going to see this. Once you're logged in, you'll see your active subscription. Obviously, you're not going to have all these, but you'll have active resources, and you'll see class schedule. And I haven't updated this week's classes yet. This was last week's classes, but we have class on Tuesday, Wednesday, Thursday. You click on the link to join. If you want to go to and look at archives, you can do that here. The class replays we post after each class that same day. And then, of course, the different platforms with the different brokers, and then the software itself.
And then we have learning modules.
So you click on the download the Premium Edition 3 software. It'll show you this little logo we have. You click on that, and you'll see there's your download exe right there. You run it, you install it once you have the platform installed first. But all that is listed very specifically.
And we have lots of learning modules.
Right.
Nathan was interested in that.
Learning modules, educational modules up here. There's a whole plethora of educational modules in this system.
On and on and on.
We actually break down every indicator, what the MACD module, the fractals, the 5-finger, slingshot module, the trade management module. We have everything in here that you could ever want and then some. And that's more of the educational module. And then on a more simple term, we have what we call the how-to videos. And our how-to videos are the same, that you just click on the how-to videos right here, and you'll have how-to videos. How do I download a different platform? How do I install the software? How do I save it to my desktop, etc., etc. So tons of things in here for your viewing pleasure. All right? So I can promise you'll never find a teacher or instructor that is more patient, more forthcoming than I am, and you'll never find a software that is more appealing than this software right here. Again, all updates and upgrades over if you're in it for the 2-year annual special. Remember, you got to be one of the first 50 to get in on that deal, so you better subscribe quickly, because I promise you these go very quickly. But you will get every upgrade, every update.
Be worth every penny.
And we're in the process of updating some new stuff anyway. We're at version 3.8. 3.9 will be coming very soon anyway. I'm in the background constantly adding and updating. I've been working on this PAI hook and trend momentum cross process for years now. I constantly manipulate and update as the API learns and develops more about the cycling timeframes. I'm able to update that code to make it even more and more powerful. And you could ask Mr. Tucson, that's been with us for 5+ years and longer, that this hook and cross pattern is most powerful now than it's ever been. And from day one, it was very powerful. All right, so any other questions, please contact us at support@gpatrading.com. That's support@gpatrading.com. Otherwise, y'all have a nice evening, and I hope to see many of our new subscribers and on class on Tuesday. That's this coming Tuesday. Take care, and God bless you.